Go ahead and start this committee meeting. First, we're going to hear from Mr. Higgins, the Executive Director of PERS, give us an update on PERS, and there's a corresponding bill that we'll take up. Let him explain that, but thank you for being here, Mr. Higgins. If you would, please give us an update.
All right, will do. Thank you, Mr. Chairman, members of the committee. Certainly great to be here. Great to also be in person. I think the last time I had a chance to talk to this committee was just before the pandemic. So it's great to be back and great to be here. We have a lot of strong results to report to you and some positive results to share with you. First, let me call your attention to the blue folder. A lot of good information in there that you can read at your leisure. A lot of that information is also on our website, and I'll be covering some of those numbers today, but just wanted to mention that to you and call that to your attention. And just as a quick refresher on PERS, as you know, we are a traditional defined benefit pension program. We're a large consolidated system, around 35 billion, and we cover all the non-federal government employees in the state. We're governed by a 10-person board of trustees. The state treasurer is an ex officio member. The governor has an appointee, and then the other 8 are elected by the members of the groups that they represent. Also, I like to always mention when speaking to a group how important I think PERS is in the terms of dollars and in the terms of people. From a dollar perspective, we pay out now around $3 billion each year in retirement benefits. That ripples throughout the state. Over 90% of that stays in the state of Mississippi, creates a multiplier effect and generates hundreds of millions of dollars in tax revenue supporting that, as well as many jobs. So important in the terms of dollars. As far as in terms of people, we have well over 300,000 now in total membership. That's, as you know, 10% roughly of the state's population in direct touch, not even counting relatives and friends. So very impactful in terms of people. And I think it's important we always remember the people behind the dollars and behind the funds, because as you know, we're talking about teachers, nurses, law enforcement, first responders, other public servants such as yourselves. And it's certainly our privilege to serve as fiduciaries to serve the membership. As far as some results of last fiscal year, we have some strong results to share, positive news to share. But I want to emphasize, I hope to do that with balance and moderation, if you will. I'm reminded of a sports team where sometimes a coach may say, you know, the team, don't get too high, don't get too low, you know, and for some reason, I'm kind of reminded of that coming off of a very good year in investments, because we always have to be looking toward the future. We always have to remember our long-term goals and looking at different scenarios and developing various contingencies and thinking those things through, because we won't always have record returns or a long bull run. With that said, though, last fiscal year had a very good year. The gross return was almost 33%. To my knowledge, that's the highest return on record. It also was not just a situation of a rising tide lifting all boats. We exceeded our benchmark by 4 or 5 percentage points. We also compared very favorably to our peers, ranking for the last fiscal year, in the 7th percentile. We ranked in the top decile across multiple time periods. In the 7th percentile, that's a percentile ranking. I think the absolute ranking, I believe, was 3rd in our peer group with our investment consultant. So a very strong year. Now, with that said, we shouldn't be surprised that it happened. We just did our job. You know, I commend the staff. I thank the board for their leadership, which continued on all throughout the pandemic. And that's also what we're here for. And that's why we have a strategic asset allocation to rebalance like that. So we were just carrying out the regulations and the policy as we should. The other thing I want to mention, again, is we just have to always be looking for the future and considering those different contingencies, because it won't always be that way. One last thing on that, just from a transparency standpoint, due to the nature of our fund, when times are good, we're apt to look a little better than our peers. And when times are bad, we may look a little worse than our peers. So I want everyone to remember that. I have to come back in a couple of years, but that is a key point just to mention as far as our portfolio. Moving on more to this fiscal year, off to a strong start. Through December fiscal year to date, it was around 6%. Of course, that's changed. January has reminded us of that need for caution and the volatility that has returned to the market. So that 6% estimate was through December. That's not the case now. Through yesterday, we would estimate much less fiscal year to date, maybe even less than 1%. So hopefully we'll have a strong conclusion to the year, but just to give you an idea. We also updated our latest round of actuarial reports as of FY21. Those were finalized and presented to the board in December. How I would summarize those results is like this, that there was definitely an improving trend and also some positive results, but several things to monitor very closely. A few highlights of that report deals with the number of actives and retirees. Actives went down around 4,000 as far as active membership contributing to the system went down around 4,000. The number of retirees went up about 3,000. The funded ratio is 61.3%. That's the actuarial funded ratio. I want to pause there just a little bit. That is a comparison of the actuarial assets to the actuarial liabilities. Again, 61.3% increased almost a percentage point. Now, you may ask yourself, with such a strong year, why did not increase more? And that's a really good question. And a couple of things that I'll mention. One is we use an actuarial smoothing method for the investment returns. We do a 5-year smoothing. So not all of those investment returns are factored into that particular ratio. And then the other thing that's really behind the numbers is this year's reports were based on different assumptions and the changes in the assumptions recommended by the actuary, one of which was a reduction in the assumed rate of return from 7.75% to 7.55. And even with that, there was still a slight increase in that funding ratio, which is a positive outcome. It just doesn't jump off the page at you as much. As far as the funding policy, there are 3 main metrics that we use in that. One is the funded ratio. The other one is cash flow. And the third one is the ADC ratio, or the actuarial determined contribution ratio. Last year, this time, with all 3 of those metrics, we have a red, green, yellow signal light reporting type approach. And last year, those metrics were yellow, yellow, red. This year, they're green, green, and soon to be yellow. So that's that improving trend I was talking about. The projected funded ratio in 2047 is now a little over 93%. Now, I will emphasize, while that's an improving trend, that's just a projection based on assumptions. That could change, likely will change. So we have to be cautious, but that is part of the results. As an example of one of the things to monitor closely is the amortization period. That is referred to on how long it would take to pay off the unfunded liability. That's the difference between those actuarial assets and actuarial liabilities. And as of the latest reports, around 19 billion. That increased up around 50 years. And that in and of itself is certainly something to monitor, but it's projected to come down very quickly over the next couple of years. And it's largely due to those investment gains that aren't fully recognized. As we close out, as far as last year, we continue to receive awards in our financial reporting. The annual comprehensive financial report was issued in December. The audit was complete. We're pleased to report we had a clean audit, no findings or major issues there, which is certainly something not to take for granted with an agency such as PERS. So we're thankful for that. We hope to continue that, as well as improve on other aspects of service and operations. Certainly not perfect, always room to improve, but overall positive results from last year. And with that, Mr. Chairman, I really appreciate the time and would be happy to answer any questions.
You spoke to the estimated funding ratio in 2047 at 93%. Can you expand on that a little bit?
Sure. What we do, and I think it's 93.5 technically if you see something slightly different in some of the materials, but we do 2 main sets of actuarial reports annually, the valuation report and the projection report. The valuation is more of a snapshot in time. The projection takes a lot of those same figures and projects them out over 30 years. 2047 was chosen because that's 30 years from when it was adopted. The new policy was adopted, I think, in 2017. But what they do is they take that information and they project it out. So the projected ratio in 2047 will be looking at all the various factors, money coming in, money going out, estimated and assumed investment returns, and projecting what it would be. So it's projecting to go from 61.3 now to 93.5 in 2047 based on the current situation, but it's subject to change.
Okay. And what are we doing different, or what is the scenario that makes it where our funding ratio seems to be stagnant around 60% for the last several years, and all of a sudden in 2047 we're expecting it to be at 93%? You and I had a conversation earlier, and you talked about just the actual cost of PERS. Is that part of it? Is it's not going to be as expensive to?
It's definitely part of it. I'll answer it kind of a forward-looking and then a backward-looking to different aspects of that question. As far as the forward-looking part, a lot of what is fueling that, 2 main things: the strong investment returns, of course, because now we're going to have a larger asset base to move forward. You got to remember, it's based on assumptions; it could change. So it just depends on what it looks like going forward. The other thing is, we project that through the mid-2030s, as PERS continues to mature and retirees go through the system, and things continue to evolve, the demands on the system go down. In other words, as the baby boomers kind of move through the retirement profile, there's less financial burden on the system. So that's part of what's changing. So investment returns, the last year's good investment, and the maturation of PERS as retirees go through is the forward-looking, part of the reason for that improving trend, again, based on assumptions. To the other part of your question, as I understood it, as far as the 60% or so, why have we hovered around that same amount for the last few years? Excellent question. And it's interesting to answer that. I'm going to try, the short answer would be the liabilities have been increasing as well as the assets, as well as we probably have about $5 billion or more in investment earnings that have not yet been fully recognized due to that smoothing method. To go a little bit further into the history, so the $5 billion unrecognized earnings and the actuarial smoothing, that kind of speaks to the current situation. But if you were to ask me this a year and a half ago, I would have mentioned, if somebody asked, why was there a 10-year bull run, but yet the ratio is still about the same? And the answer to that would be probably the liabilities were growing as well. Yeah. And then if you go back a little bit further and look at the last 20-year time period, that's probably even more pronounced, which I could outline further, but I hope that's responsive.
What type of plan does PERS have a plan in place in the event of just a bad market condition that our funding liability drops? Are there measures in place that y'all say, okay, we're going to take corrective action? Because, apparently from historical reference around here, there's not a whole lot of action taking place on making any major changes to PERS. But what has PERS itself done to put in place some measures if the funding formula drops, kind of a disaster happens? What does PERS have in place right now?
Anything significant would require a change in law. But what I can say is we definitely have done a lot of sensitivity analysis, stress testing, scenario analysis, and working through and seeing what other states do and have done and what we could potentially do here as a contingency. Now, with that said, I have to really emphasize on this part because I realize the importance and sometimes the sensitivity to it. The board has taken no action on what I'm about to talk about. So there's on this part, just being responsive to the question, the board has not voted on or taken any action on this. But we've looked at things like we've looked at how it would look to have maybe a new tier, a different tier for new employees in the future, to where for new employees potentially in the future that they would maintain the same DB benefit, but not necessarily have a guaranteed COLA, that it would be maybe more ad hoc or tied to inflation or something like that. We also, as you probably know, we've looked at different scenarios and options associated with changes to the COLA in order to maintain the fiscal necessity of the fiscal stability of the plan. A couple of the scenarios we looked at, and an idea that I suggest, and again, the board's taken no action on this, I would frame this in the idea in the framework of contingency planning and looking at that. But to your question is, if we ever got into an austere situation, perhaps there could be legislation considered to give the board the authority or the permission to, in order to maintain the fiscal integrity of the plan based on actuarial necessity, to temporarily pause the growth in the COLA or something to that effect. So that's just an idea of things we've looked at and continue to look at. If we get in that situation, we could work together with the legislature, of course. But again, I'm not, that's not something the board is proposing or recommending, just giving an idea of the things that we've looked at and costed out.
Thank you. Are there any questions from the committee? Senator Blackman.
Thank you, Mr. Chairman. The funded status, how are we compared to other states in terms of this 61%?
Probably toward the lower end of the middle of the pack, so a little bit below median. So there's certainly states that are higher funded, 80%, 85%, 90%. There are those like Illinois and Kentucky that would be much lower. So we're probably the lower. It depends on how you're asking or which set of data you're looking at, but it's the lower portion of the median range, if you will.
And do you have any timeline as to when we would be increasing this 61%?
Well, the current actual projection projects that it would be increasing over time, eventually with a 93.5% in 2047, with it gradually going up at different time increments. Again, that's based on the current information and current assumptions, but it's a projected upward trend right now.
I know a lot of private entities are investing in cryptocurrency. Are we at all into that?
We are not directly. We don't do that directly. Now, some of our managers may, I think one has invested in something indirectly with some technology associated with administering that or trading that, but not directly in the form that you're asking.
Thank you. Thank you, Mr. Chair.
Thank you, Senator. Senator Philligan for question.
Thanks, Mr. Chairman. Can you tell us how much of the state's assets are invested in the stock market?
What was that last part? I'm
The
sorry.
retirement assets, how much of that percentage-wise is invested in the stock market?
61% equities. You know,
And how does that compare to other states surrounding us?
we're probably a little bit higher in equities than what we call return-seeking type assets. Overall, we're 61% equities, 20% fixed income, 10% real estate, 8% private equity, 1% cash and other. The equities total is the 61% I mentioned. It's probably a little bit more than some of our peers.
Right, and that would explain the reason that we've had such a large increase this year, but it also would explain why you could have a large decrease at the same time, which we've had in the years past. Do you think it's wise to have that large of a percentage tied to a stock market that can be fairly volatile?
Well, great point on the first part, and it's partially related to my comment earlier about when times are good, we may look a little better. When times are worse, we could look a little worse. We do think that it's good. We go through a process of looking at that strategic asset allocation every so many years. We do think it's a good mix for us, a prudent mix for us, in line, even though a little different with our peers because each state's different, but in line with that and so forth. But it's also, that question's a good segue into the part of the reason we want to talk about our bill today at the appropriate time is to hopefully add some additional diversifiers to the portfolio and maybe begin to shift some risk.
Okay, thank you, appreciate it.
Thank you, Senator. Any other questions? Senator Bryan.
I was just going to make a suggestion or a comment and see if there's a response. But Mr. Chairman, I don't understand a lot of the fine points. But if you think about it, every single obligation that the system has is based on a dollar amount. And what has happened historically is that as time passed, inflation ate into that amount, and those dollars were paid off with cheaper dollars because of inflation. And so from that perspective, since the system owes these debts, inflation helps debtors. Some of us are pulling for it, by the way. And so what has happened to the system over the past 10 years is two things. Number one, I think there were some overly generous decisions made about benefits, but that's a very long story. But secondly, all of that kicked in almost exactly at the time that interest rates dropped to historic lows and have just stayed there. And so the system over the past 10 years, and you look at the data, it looks like the system is struggling. It's because they've not had the benefit that they historically have because of inflation. And as you get more inflation, and it sure looks like we're going to get at least some, then what happens is payroll goes up just to keep up with inflation. When payroll goes up, the dollar contributions from that percentage go up. So the system gets more money there. And to the extent the system invests in stocks, in bonds, they get a little bit better interest rate. And so I think long-term, one of the things that's going to benefit the system is inflation. And in fact, if you look at when the system was growing about what a great job they were doing and all of that back in the 80s, that was really as a result of pretty high inflation. And so anyway, my comment is, apart from all the rambling, long-term, inflation makes the system more sound, again, because all of our assets are on fixed dollar amounts. And if we have a little bit more inflation, that should help eat into the unfunded liability, just as it has in previous years. And as Hayden Miller used to say, and so my question is, don't you agree with me?
Thank you, Senator Braun. I'll try to engage in public math. But are there, I think Senator Sparks.
Thank you, Mr. Chairman. The annual rate of return was 32.71 based on the figures we've been given. And then the annualized was 8.7 over 30 years. Is that inclusive of 21 and the prior 29 years?
That's right. Yes, sir.
Okay, so when you reference the actuarial smoothing, and I don't think I'll ask you to deeply define that, is that being applied as we're going to move 32 points more fully funded over the next 25 years based on your calculations?
Yes, if I'm understanding your question correctly. Now, we are probably looking at different, actuarial information versus investment information, but the full realization of 21 returns, i.e. the part that's held out due to the smoothing right now, will be factored in and is factored into those projections.
Okay, so even with the actuarial smoothing process over the next several years, you see a 1.3% annual more fully funded?
We'll have to wait and see how the future unfolds. But one thing that I will say, that if you were to look, I gave you the 61.3 is the actuarial funded ratio. It's not in the folder, but if we looked in the actuarial valuation on the main page down toward the bottom, there's a market value ratio and it's around 70%. That gives you an idea of how it would look based on today's numbers if they were all folded in.
Okay, but we've just, for the past 5 years since you did your 30-year estimation, we've barely grown as far as the actual funded status, but you believe we're going to have a 32% increase in the next 25 years based on your presentation?
I would say that's what the actuarial projection report currently reveals. And we have confidence in that and think it's good work based on the situation, circumstances, and the current assumptions, but it certainly could change. If we were to have a negative year or a couple of negative years, that would change, but that's currently how it's projected out.
Thank you. Thank you, Mr. Chairman.
Thank you. In your smoothing, you do what, 5 years?
Yes, sir. It's a pretty common method used through other public pension systems. They'll either do 3, 5, or 7 years. 5 is pretty common. And it's the goal is to hopefully dampen some of the volatility from year to year.
What is the 5-year average right now?
If you hadn't asked me, I could have told you. It's in that sheet. I know the 10 year is 10% roughly. Is the 5-year around? Not, hold on, give me just a second. 13.
Okay, thank you. Senator McDaniel for a question. There you go.
Mr. Chairman. This thing's not working. You hear me okay?
Yeah.
Am I clear?
Yeah.
I appreciate your time here today. I may have missed a couple of things. I was running a couple of minutes late, so bear with me if I did. As an initial matter, I don't share my colleagues' more optimistic view on inflation. My concern is the inflation. So I want to talk about that just for a few minutes. If we have stable assets and the inflationary amount increases, and it is increasing at a historically high rate at this stage, granted, there'll be more dollars in the system. So the numbers may appear to be more stable, but the end result will be, and correct me if I'm wrong, a paycheck to a retiree that doesn't buy as much services or goods as it once did, correct?
Certainly, that's possible.
So ultimately, it's the inflation is the problem, because at the end of the day, we're trying to make sure our retirees have enough money to survive, to live. If inflation gets too high, that's a hidden tax on their income, is it not?
Could be. Yes, sir. I see what
As a
you're
general-
saying.
Right, as a general rule, that's what occurs. And so my concern is if the inflation is not brought under control, the numbers will look really good on paper. But when the check reaches the end retiree, it won't be nearly as profitable for them. What is the PERS system doing to make sure that those rates of inflation are built into the system, if anything?
Sure. Well, interesting question. Also, if I could, going back to Senator Bryan's points as well. In all cases, when it comes to the inflation question and topic, that certainly could get very complicated pretty quick. Very astute points all around. But speaking and trying to speak more to the PERS scenario and the finances in the PERS and so on and so forth, and not so much the policy or the political side, it's definitely an important part. It's an important part and oftentimes a building block to some of our main assumptions from our investment consultant and also from our actuary. As for the benefit, and if I could, I'll comment on something Senator Bryan said. As far as the benefit, what I would say there is the benefits are defined in law. They're set in state statute. And as you know, there's currently an additional benefit commonly referred to as the cost of living adjustment, and it's set to be 3% per year, simple up to a certain age, and then 3% compounding. So it's definitely set in law, and the benefits are controlled by the legislature, and there is a cost of living adjustment in the statute. So hopefully that would address and hopefully mitigate some of those concerns.
That makes sense. So basically, it's a static 3% roughly, because that's a historical trend, I would suggest, maybe 2 to 3% over time. That trend has accelerated now. So ultimately, if that's not corrected, the retirees are going to receive less purchasing power than they would otherwise because of inflation.
That theoretically could happen.
You also mentioned the increased liabilities in the plan. What do you attribute that to?
A variety of factors. One, I would say, and part of this was on the asset side, but over the last, we've had decreasing number of active members. We've had a growing number of retirees. Over the last 10 years or so, the number of active members contributing to the system, I think, has gone down by around 9% or so. The number of retirees, I think, has gone up over the last 10 years by about 30%, maybe a little more, and they're living longer. So it's just a variety of factors. Also something that Senator Bryan alluded to, and just to give a little history of the longer time frame, in the late 90s and early 2000s, some additional benefits were passed. One of them is related to the cost of living adjustment. And then shortly after that, and if you look in that sheet, you'll see, of course, you can always pick a different time frame. But if you look at the 20-year return, that's the one that doesn't compare as favorably. But shortly after the new benefits, there was the smaller recession around 2001. Then, of course, there was a Great Recession a few years later, and there has been the low interest rate environment. And so all of those together have factored in to draw on that ratio.
Makes sense. Just a couple of more. The ratio percentage is something we hear a lot in the press. And for a long time, the argument was it's roughly 60% funded. And that was extrapolated over 30 years, correct?
Well, the 60% is the current snapshot as of now.
As of right
roughly.
now.
Yeah, it's usually the annual, that number's been the annual valuation.
Right, that makes sense. So as I'm assuming the projections are increasing because the assumptions are more favorable than they were preceding this growth that we're having. Did you say it would be 94%?
That's what the actuarial projection report currently revealed. In 2047 will be 93.5%. Now, I really want to emphasize just a projection based on estimates, but driven by two main factors, other factors, but two I'll mention, is a good investment return, and then also the maturing of the system as retirees pass away and kind of go through the system.
I certainly hope you're right about that. And I'd like to know who your stockbroker is too when I'm done today, so I can.
That's why I'm trying to relay caution about that projected number.
Absolutely, yeah.
But
Well, thank you for your time.
oh, absolutely. Could I mention one thing?
Sure.
I just want to mention one thing to Senator Bryan's points from earlier, obviously some very astute observations. One thing I'll add that I think speaks at least partially to what he was talking about. Yeah, I'm reminded of a chart that our investment consultant put together, and it was something like if you looked 30 years ago, to get the same 7 or 8% return, you could be like 98% cash and the other 2% in fixed income. And then 15 years ago, it was around 60-something% fixed income, whereas now you would have an asset mix to achieve that same return that involves many other classes, much like us, and only 2 or 3% in fixed. So just showing the difference in the environment then as to now. Just thought I'd add that as background. That brought that to mind.
All right, thank you. Senator McMahon, question.
Mr. Chairman, thank you. Director, is he going to be available when we get on the bill, or is this the time
Yes.
that? Okay,
It's gonna be on the bill.
I'm going to refrain my questions for now. Thank you, Mr. Chairman.
Thanks. Are there any other questions? If not, we'll pick up our first bill. We'll take up Senate Bill 2839. First bill to increase total book value limit for certain investments from 10 to 20% of total book value. Mr. Higgins?
Thank you, Mr. Chairman. It's, as he described, it's Senate Bill 2839. I appreciate the chairman being willing to sponsor it for us. This is a simple one-line change that increases the basket clause from 10% to 20%. It's really, that's the only change in there. And the bill I have, the copy I have, that change is on page 6. And I'll mention that this legislation has been fully reviewed and supported by the full PERS board. It also makes no changes to benefits in any way. This is investment legislation, and we think this will provide an additional tool in the toolbox to hopefully achieve some additional returns while mitigating risk by adding additional diversifiers to the portfolio. Now, that's the short version. If passed and signed into law, the amount would not automatically go to 20%. The board would still follow its careful and prudent process. This is just the first step. Now, again, that's the summary version to provide a little bit more background and unpack some of that. Every 3 to 5 years, we do an asset liability study, and we completed that last year. We do that with our investment consultant and staff. And the results basically indicated that they recommended, and we agree, that we should maintain our current growth orientation, but they recommended that we pursue and consider 2 additional asset classes, one of them being infrastructure, the other one being private credit. And we want to do that, but that's where it comes into the basket clause. There's a 10% limit in that code section that limits those investments that are not specifically identified, and it's currently at 10%. We already have a target allocation to private equity of 8%. And we like private equity. Private equity has done well for the fund. It's done good. It did good last year. It's done good historically. We've been doing it for about 13 years. So we want to continue that. But because that target's 8%, to provide some room to consider private credit and infrastructure, we would need to increase the basket clause. And that's our primary motive for asking for that. And with that, we'd be happy to answer any questions.
So you currently would only have 2% room for 2% of your portfolio.
Yes, sir, basically. And I mentioned target return. Now, this can get a little complicated too. The target is 8%. The current book value of private equity is between 8 and 9%. Then the market value is different, but there's not much room to consider that. If we wanted to add, just for conversation's sake, 2% to private credit or 2% for infrastructure, there's not really room there to consider that without increasing the basket clause.
Gotcha. Okay. Are there any questions on the bill? Senator McMahon, for a question.
Mr. Chairman, thank you. Director Higgins, thank you for taking, I'm sorry to have my back to you.
No, no problem.
Okay. So as you know, Director, many state employees have worked at an inferior or an anemic wage for the past 25 years, and some of them sometimes up to 40 years before they retire. Many have done so with the understanding that, you know, they're going to be able to draw this benefit from this retirement program. The retirement program is governed by your board of directors, who are all elected officials, who are all elected by the members. Was it a unanimous decision to allow you guys to broaden this category for potential higher yielding investments?
Yes, sir. And for more detail, the board voted at its August meeting to pursue this. It was unanimous of the ones that were there. There were 9 members present. It was unanimous. And then the additional member who is absent, I can confidently say that he supports the legislation as well. And in fact, it's rare for him to be out. It was just due to his role at the hospital and what was going on at the time. He wasn't there. But yes, it was unanimous for those that were there. And then the other one supports it as well.
There was no minority report.
No,
It was unanimous.
no, sir. No one voted against it.
So the 2016 to 2020 session, on more than once, this body intervened and committed additional funds to shore up some gaps in PERS. But you feel confident, you're advising us, and your members are advising us that you feel confident that this is a pathway forward that is going to be steady for the retirees of this state.
I think the suggestion or the recommendation and request to increase the basket clause to pursue these additional asset classes is a good tool and a good thing to consider and do in a prudent way. Now, it will probably be a small allocation. It won't be an end all be all fix all, but definitely think, and the board thinks that it is a prudent and wise decision in the best interest of the membership.
Director, thank you for taking my questions. Chairman, thank you. I yield.
Thank you.
Thank you. Any other questions on the bill? Seeing none, for a motion. Motion is title sufficient to pass. All those in favor say aye. All opposed? The ayes have it. That bill will be reported out. Thank you very much for being here today.
Thank you. Thank you.
Our next bill, Senate Bill 2063. This is the qualified resort area bill. This will more than likely be the vehicle for an omnibus yearly qualified resort bill. There are some ideas floating around whether or not to tie this to a, possibly have a referendum where dry counties can vote on this. And so it's not necessarily coming to us every year to pick these places out, that the local governments will be in charge of that. That's one option. Other option is to continue doing it like it is. So anyway, this will be a vehicle that will allow us to continue. And I know several people have qualified resort bills. So we'll use it for a omnibus bill. But are there any questions on the bill? Seeing none, for a motion. Motion is title sufficient do pass. We'll do a reverse appeal for all those in favor signify by saying aye. All opposed? The ayes have it. That bill will be reported out. Senate Bill 2090 is a distinctive motor vehicle license tag bill. I think it may be the House's year to do it, but we told them we pass a vehicle to have a lot for everybody to put their tag requests in. That's all this bill is. And there are no questions. I'm gonna make a motion. We add a reverse repealer to keep it alive to the end of the session to accumulate a list of everybody's tag request. So if there are no questions, my motions, we add a reverse repealer. Are there any questions on the amendment? Seeing none, all in favor, signify by saying aye. All opposed? The ayes have it. Any other questions for motion?
Title sufficient do pass.
Committee sub, thank you, Senator.
Committee
Ingram.
sub.
Motion is title sufficient to pass committee sub. All those in favor say aye. All opposed? The ayes have it. That'll be reported out. Next is a Senate Bill 2188. This is a bill Senator Simmons had that is working with Child Protective Services on waiving driver license fees for children that are in the custody of CPS. So we want to try to figure out if we can, this is something that will help these kids with getting a job, with being able to kind of move on in life. And so we want to look at that. And so I'm going to make a motion for a reverse repealer that they're wanting to get a fiscal note and check on a few other things, but that's the thrust of the bill. And I think it's a worthy cause that we can look at, but we want to find out what the cost is going to be. So if there are no questions on the bill, I'm going to make a motion to add a reverse repealer to it. Are there any questions? Seeing none, all in favor signify by saying aye. All opposed? Ayes have it. Any other questions on the bill? Seeing none, for a motion. Motion is title sufficient to pass committee sub. All those in favor signify by saying aye. All opposed? The ayes have it. I'll be reported out. Next bill is Senate Bill 2507, Transportation Commission repayments to public entity that advances funds, may not include interest or other fees. What this bill does is it adds on line 278. It puts in public back into statute. It was taken out a long time ago. And what this basically does is it allows local municipalities or counties to front bonds to pay for projects, and MDOT would come back and agree to pay off the bonds. Right now, they've currently racked up about $700 million in debt doing this, and they haven't done these in almost 10 years. And so what this is going to do is prevent them from entering into any more of these agreements. So if there's any appropriation or funding for projects, it would go through the legislature. So that's an explanation of the bill. And when we get on the floor, this is double referred, so we're not going to amend it here. We'll amend it on the floor. We're going to make sure that there's language in there, working with Department of Transportation and Senator Branning on making sure there's language that allows them to continue to make the payments on the current obligations they've already entered into, and can also service the debt. If there's an option to refinance it and get a lower interest rate on them, we want to leave that flexibility in there for MDOT to do that, but it will not preclude them from paying on any obligations they've already agreed to pay. And so we're working on that. We'll have an amendment on the floor for that. Are there any questions on the bill? Yes, Senator Thompson for question.
Thank you, Mr. Chairman. I believe I saw Mr. White here earlier. I just want to make sure whether this has anything to do with any pending litigation, whether this change would affect, is there anything out there that we don't know about?
Litigation?
Yeah. For example, is there a municipality claiming that they're entitled to interest?
No, there's not.
Nothing.
And they're still making payments on all the bonds and everything. We're going to make sure they continue to do that. It's just they won't be able to enter into any new projects.
Okay, understood. Thank you, Mr. Chairman.
All right, thank you. Any other questions? Seeing none for motion? Motion is title sufficient do pass. All those in favor say aye. All opposed? Seeing none, bill passes. Next is Senate Bill 2747, Senator Chazanall.
Thank you very much, Mr. Chairman. This bill brings the privilege tax in line with current needs, and it reforms that, and that's all it does. It just changes the privilege tax on native spirits.
It was my understanding we did this last year. There was just a conflict in the law that it didn't actually bring the dollar amount over. And so that's all this does.
That's all it does. It's just a technical repair.
All right. Any questions on the bill? Seeing none for a motion. Motion is title sufficient do pass. All those in favor signify by saying aye. All opposed, no. The ayes have it. Next is Senate Bill 2769. This is a bill that was brought to us when people leave land in their will to university foundations. Some of the counties across the state exempt ad valorem tax on it. Some don't. And what this does is just provide some uniformity that it will exempt ad valorem taxes to a foundation representing an institution of higher learning on any of the land that they own. That's basically what the bill does. Are there any questions concerning the bill? Seeing none for a motion.
Title sufficient do pass.
Thank you, Senator England. Motion is title sufficient do pass. All those in favor signify by saying aye. All opposed? The ayes have it. Next bill is Senate Bill 2844. I'm going to recognize Senator Johnson to explain.
Thank you, Mr. Chairman. This is the bill regarding the ABC warehouse. As everybody knows, there's been significant issues with liquor and wine distribution throughout the state. DOR got hit with a perfect storm of supply chain issues, employee hiring issues, and as well as an outdated facility. And so we're going to have to do something with the warehouse, make changes to how we handle it. And so this bill outlines what the Senate's proposed plan is. And we prioritized consumers, which are primarily Mississippians, permittees, which are primarily Mississippi small business owners, and then state revenue, and try to put together the best plan possible to do the least harm to any one of those three groups. And let me preface that there are a few things that we are still working on with DOR and DFA just to make sure that it functions correctly as we intend it to. And so we will have a floor amendment on a few technical changes that they have, and we're still working through those details. But to go through the bill now, the changes that we made are primarily in the first 11 sections. Section 1 is definitions. Section 2 deals with the warehouse construction. We're just outlining that the state will build a new warehouse. We intend to do that based on the specifications with the company that we hire to our contract with to be the operator of the facility. We want to do that within 50 miles of the Capitol building. We're going to prioritize state-owned land, but we want to weigh or compare the cost with what site work may be there versus another site. Warehouse operations will be contracted with a private operator that's in the business of warehouse and logistics. It will include shipping, but shipping, we currently have a contract, and there will be a time gap between building a new warehouse and now, which can fulfill the current contract from the same location we're in. And then the private operator can either continue to sub out the shipping or they can do it themselves in-house. And Section 4 is resumption of control of a state. If we need to, that we can take it back. There'll be a plan in place to do that, and then issue a new RFP to do a new contract with another private business. There'll be a contract compliance officer that is on site. 6 is special funds. We'll be setting up 2 special funds, one for the construction of the building and one for ongoing capital expenses and maintenance, which I'll get to that again in a minute. 7 and 8 deal with the funding. We will be using either a bond or capital expense to fund the building, the warehouse. No real changes to 9 and 10. And then, and going back to 8, we currently have in that we'll have a quarter per case fee built in, but it's on a scale. So it shuts off based on a certain amount over a certain time period. And so the idea is that as you build a new building and you have new equipment, for the first few years, you don't have, you shouldn't have any maintenance, you should have warranty. But the longer the time goes by between inflation and wear and tear, you're going to have more and more costs. So this is designed to build a fund without a permanent tax or fee, just enough to continue a fund so that we can maintain capital expenditures without legislative approval every time that they're needed. And we want to avoid getting back into the same situation that we're in now. We want to put together a plan that will continue to run long after we're not in the legislature anymore. And then Section 11 removes the wholesale tax. So currently, sales tax is charged on the wholesale cost to permittees. And then they turn around and sell at retail and they charge us a retail sales tax. Then they net out the difference, keep what they paid in already and pay the difference in to the state. We would just be removing the wholesale tax part of that. They'll just pay like any other vendor in the state would on the retail sales tax. And that's an explanation of the bill that we have now.
Are there any questions? Senator McDaniel for a question.
Did you say questions plural?
Maybe a few. Thanks for the explanation. That was very good. I know my position here is probably the minority position, but we have to talk about it. Hopefully one day we'll come to our senses and figure out what to do about ABC. I once asked a colleague when I first arrived 2 years ago, I said, what's the point of ABC in the warehouse but taxation? His response was, is there anything else? I know there's been conversations about privatization. And I know the body probably isn't quite there yet. But if we construct this new industry or this new warehouse, it seems to me we're kicking that can down the road an awfully long time. So I guess my first question is, what will be the cost of the new construction?
Yep. So we anticipate the cost to be between $50 and $60 million to have the warehouse built and the equipment installed, finished out. I would say though about privatization, I completely understand your point and don't look at it differently in a vacuum. But this is not a privatized where it's open market. You can buy Crown Royal from 6 different suppliers. Suppliers have a monopoly on the products. So you'd be going from a state monopoly to another monopoly, essentially, because you can only buy certain products from certain vendors. One of the other caveats to doing that is that permittees have built their business based on a model that the state has set up. If we were to get out of the business, that takes away some of their competitive advantage. And we can argue, well, let's throw them into the free market. But what that does is that pits possibly Mississippi small business owners against the buying power of Costco or Whole Foods. And it's not as much of a competition of going out and working out deals with different vendors and suppliers. You're a small Mississippi owned business that technically can only own one liquor store, and you're competing with people who have national brands and national contracts. So I think, as well as we have certain pricing mechanisms for people statewide, which they can count on. We have a delivery system they can count on to be fair throughout the state, not just to say the Jackson metro area versus the coastal area. So I think that one of the issues that we have is that we have people that have built their business on a business model based on our current law, and we would be substantially changing that for them.
Right, and that's not a bad argument because it will cause some short-term damage, particularly to these individuals that the state is presently protecting. And that's what's interesting, because this is a form of protectionism. And I've never seen a system where protectionism is particularly good for the end consumer. And I get it. It might be that alcohol is seen as this, supremely dangerous thing and no one should touch it, so we have to heavily regulate it. But when we do, there is a cost to the economy, there's a cost to the taxpayers, there's a cost to the end consumer. And so what I'm hearing is the state of Mississippi is going to protect a handful of businesses at the expense of everyone else.
Well, I don't believe that's accurate. If the state were to completely get out of it, we would no longer receive any revenue from that. And let's say from the markup revenue, right? We may still have the excise tax, sales tax. But if you take that part out, and let's say that it's $100 million, then we will have to cut, which you may be happy to do, or we would have to fill that revenue in another place. And I would also say that if we keep any percentage markup and what you say, get out of the business, that markup combined with the new markup from the suppliers will cause an increase in cost to consumers. So not necessarily better for consumers. And so, like I told you, we prioritize those three groups: the state revenue, the permittees, and the consumers. And if we get out of the business, we're going to hurt one or more of those.
Right, but again, though, there may be some short-term damage done, but the market operates in a pretty efficient fashion. Winners and losers typically rush to the top. Now, to the earlier point, and we can talk about this later, obviously, you and I, we agree on a lot of things. Again, we're protecting state revenue. And I think sometimes we forget where that revenue comes from. It's the people's money, not ours. And sometimes we think, well, we have to protect our revenue, and we're doing it now by economic protectionism of others. In a perfect system, people in the state would be able to buy what they need in the free market, and the cost would adjust downward for everyone. And that's normally the way it works. So again, my concern in protectionism, first of all, and I don't think it would shock you to know that if we decrease taxation on the people of the state, I would be all for that, right?
Right.
And I guess particularly with my last question is, I can't think of a better time to move toward a privatization model, considering how much surplus we have right now with our revenue. We're sitting on record surpluses across the board, not only from just standard growth over the last 10 years, but the federal money's being pumped into the system of creating residual growth. I can't think of a better time to give taxpayers a break across the board, particularly in something so protected as this market. So I guess that's my position. I don't really have a question there. I guess my question would be, would you work with me at some point in the future to maybe find some tax relief for our citizens?
Very happy to find some tax relief and government efficiency.
Thank you, Senator. Senator Chasnoff for a question.
Thank you, Mr. Chairman. Senator Johnson, I've dealt with a number of alcohol-related issues through tourism over the past 15 years. In fact, some of the smart alecks at the back of the Senate have referred to me as the liquor lady, which is sort of unusual because I don't generally drink hard liquor. But I deal with a lot of independent business people. In fact, I try to talk to the folks who are actually the package store owners and get their input because their livelihood depends upon this. And I think we have close to 800 package stores in Mississippi. That's a lot of independent business people. When I go and talk with them, their main concern is they can't get product. And what used to take them a couple of days to have delivered, even during the Christmas holiday season when their sales are the greatest, they can't get product. Is this going to fix that problem? I would be willing to vote for anything, but I thought it would fix that problem for the people who are the independent business people in
Yes.
Mississippi.
That's definitely something that we've heard around the state. I think probably every legislator here has had someone that they know that has given that complaint. Part of the issue is supply chain issues, be it glass or from the vendor or the distiller, the manufacturer, which we can't solve those issues here. But for the things that we can control, yes, this will improve significantly because we'll, if you've been to the warehouse, it's in bad shape. We have a conveyor belt that's outdated and I think we have to fab parts for it when we need it. We, in updating, becoming more efficient, we will be able to get the supplies or the inventory that we get in out to the permittees very efficiently. And that will solve the problem that we can control.
Well, I ask these questions because when I go home back to my district, which has 8 counties in it, so I probably have about 40 package stores just within District 14. I'm concerned that they're going to say, well, what did you do to help us? And I mean, I would vote for anything if you told me it was going to really help these people who are in business.
This is really going to help people.
So I can have them call you if they're concerned that,
Of
that I
course.
voted for something that's going to build a new warehouse, but maybe it's just going to benefit the people that are selling real estate and building stuff. I want to be sure that the independent private business owners are the ones that are given some relief in this matter, because those are our constituents that come looking to us and want to know how we fixed a problem that is really destroying their businesses.
Yes.
And it's because they can't get product. What took 2 days to get before now takes up to 3 weeks. So, I mean, I'm not picking on you because you know you're my friend, but I'm just very concerned that we're throwing good money after bad.
Well, but again, we're not just throwing money out the door. We're improving. If you're in a private business, this is exactly what you would do. And you would go out and you would modernize your building, your equipment, and do the things that it takes to be more efficient. And so that's exactly what we're doing. There's nobody that would do anything any differently or better than what we're going to do.
Thank you for answering my question.
Senator Blackman.
Thank you, Mr. Chairman. Senator Johnson, when we get requests from, I guess, IHL as to they're wanting to construct a new dormitory, do we get the plans and specifications related to that?
I don't believe so.
When we get the requests from, say, the community colleges, and they say they want to build a new classroom, do we find out how many rooms are in the class, in the building, how many bathrooms, that kind of thing?
We do not.
So why is it then that in this bill, we are saying that we are saying to provide requirements for the contract for the design and construction of the warehouse? Why are we doing that as a legislative body as opposed to us doing what we normally do, allow, I guess, Department of Revenue, that they would say, we need to construct the warehouse, and they tell us we need $55 million to do that. And then they go about and do what is normally done through DFA.
Yes, we're just instructing that we want it built to those specifications for efficiency. We don't want to build a building that then does not fit the needs of what whoever the company that we contract with needs. There's all kinds of restraints. Go ahead.
Okay, so we're building this for a particular company.
We're building it for us, but we don't want to buy a shoe and tell everybody they have to fit in it. We want to fit the shoe on what's going to work most efficiently for Mississippi. And I don't think we in the legislature can just tell exactly what what type of building, how deep of concrete, what kind of support, how high. On our own, we need feedback on how to do that.
Well, would we not also have needed that when IHL comes to us, when community colleges, when our state buildings are being constructed?
Yep, I think in a way they do that, right? So they know what their needs are, and then they go through DFA and do that. And conversely, this is unlike building a dormitory where you can get easy setup plans. This is completely different. This is going to be built for efficiency of warehouse, and that is not like that's not like a college building a dorm room.
Okay, from my memory, I believe the revenue, what Chris, is it Chris Graham? That didn't we have a hearing and he presented all of these alternatives for a warehouse?
There were several options out
Okay,
there.
so is this one of the options that he presented to us?
I'm not sure. I was not on finance during those hearings.
Well, have you communicated?
I have. I've
And is
communicated
this
with,
something that the Department of Revenue is supporting?
yes.
Okay. My next question is, this is gonna cost 55 million. And then you're asking for a 25-cent charge to the cost of each case. So now is this 25-cent charge, is this the amount that is necessary to pay off the 55 million in debt?
No, that's going to go into a separate fund to maintain the warehouse and equipment for capital expenses throughout operations.
And so why then you say, okay, so it's gonna be X amount of capital expenditures, because you say once it reaches a certain amount, then you stop charging that.
Yes, and let me throw out that I'm open to suggestions on how we can improve that. But the idea is that we don't want to just throw out a tax permanently that doesn't shut off. If we don't need all of the money, if we get to a certain amount of money, we don't need to continue to charge unless we need it.
Okay, my last question. You say that the employees, they will be employees of the operator, and they will not be under state protections. They will not be, they will not be under PERS.
That's correct. Now, the company, the private company that we contract with is welcome to hire the people that we currently have. But no, we need for them, in order to operate most efficiently, to be able to hire their own people and run their operations their way.
Thank you. Thank you, Mr.
Thank
Chair.
you.
Thank you, Senator Sojourner, for a question.
Mr. Chairman, for a couple of questions. My support for privatizing this industry has long been publicly noted, and my frustration with not moving in that direction has also been noted. You mentioned in the beginning this perfect storm. I was in a liquor store in Natchez just again last night for my father, and yet again, the shelves were bare of the cheapest whiskey that he prefers as his favorite bourbon. So I understand well. There again, we have the perfect opportunity to move in a direction to get away from this beast that has burdened our state and, more importantly, our taxpayers for a long time. A couple of questions I have for you. I'm assuming throughout the research that you guys have been doing that there's been a poll or some type of survey done among package store owners as to who prefers privatization versus state-owned. And I ask that because there is, of all the liquor stores in Natchez and Adams County, only one who wants the state to still be in this business. Of all the liquor stores in my district, we're pushing almost 90% who want the state out of this business and to be privatized. So in your work on this effort, what's the total perception of liquor store owners around the state who want us to continue? To Senator Chazenal's point, they all want the problem fixed. But what's the number of the owners that want us to continue?
I have not seen a statewide poll, but this is the first I've heard of a single permittee who would prefer for the state to be out of it.
All of mine in Natchez Adams County say that they have made their positions well aware with ABC. So, I mean, I don't know who they need to, obviously they're directing them to the wrong place, but I would have hoped that we had checked the pulse of the liquor store owners so that we knew what their feelings were.
We've talked with several. I just have not heard any that said that they would like for the state to be out of it.
Okay,
They
well,
just want to get the product. And most of everyone that I've talked with has said that they want, they like the way the pricing is, the equal opportunity at cases of alcohol, and don't want it to change.
okay, I'll be sure to get you a list of those
Thanks.
people and a contact information. One other thing. You said that the building would be located 50 miles within the state capitol complex, correct?
Within 50 miles.
And that is some of the most expensive real estate within the state of Mississippi, correct?
I don't know that. I would say, there's some expensive real estate in other parts of Mississippi.
Yes, but why would we limit ourselves to a 50-mile radius and not, I mean, are we opposed to supporting other parts of the state with our taxpayer dollars?
Not necessarily. And I think that you could make a case that maybe it would be better to have multiple warehouse facilities. The problem that we could run into, though, is getting too far away from DOR. If for some reason we need to take the operations of the facility back over, it's much easier to manage that when it's close to the Jackson area. And the interstate and highway, we have 3 different major highway interstate intersections here in Jackson, which help with logistics to deliver throughout the state.
Okay. And you also mentioned the cost would go up, and I know you spelled those out previously, correct?
If we privatized?
No, if building the warehouse, the cost will go up, and
No,
you spelled that
I
out.
didn't say that. Everything's going to remain the same, except for the only change would be a quarter added to each case in shipping. However, we're also tweaking how the shipping's done, which may offset that.
Okay, so we're asking the taxpayers to continue to put a $55 million Band-Aid on a problem that we're just not on the same page with this, and that's fine, I understand. That's all the questions I have on.
Okay, thank you very much.
Thank you. Senator Carter for a question.
At one point, we talked about bailment fees. Did that not go into the bill?
Not currently. There's not bailment fees set up in.
Okay.
If you're comparing other plans that are out, the profit difference for the state is enough to where we could pay the warehouse off in 5 years or less.
Okay. And getting rid of the 25-cent charge that you're doing, why wouldn't we just continue to do that and pass that off to the Mississippians who are buying alcohol, reduce the costs?
Say that again, make sure I
So
understand.
the 25-cent fee that you're going to use for capital expenses on the building, once y'all set whatever that amount's going to be, why don't we continue to charge that and lower the cost of alcohol?
Continue to charge 25 cents
Mhm.
to lower the cost of alcohol?
Yeah.
Oh, gotcha. Okay. We can look into doing that. I do want to make sure, the biggest problem we run into is capital expenditures, right? So
Mhm.
it's easy for us to appropriate money for, in this case, say a per case fee for operations in the warehouse, but we seem to have major issues with capital improvements. And this is something, as we see from our current situation, we've got to maintain it and keep it running well all the time. And so, so we can definitely talk about that some more. I just want to make sure that money's available specifically for capital expenditures, improvements to machinery and the building.
Appreciate it. Thanks, Mr. Chairman.
Senator Horn for a question.
Thank you, Mr. Chairman. Senator Johnson, I want to commend you for all the hard work you've done in trying to get this bill before us. As I read it, I'm assuming that Department of Revenue has made the decision that they want to keep the state's toe in this business, but go out and find an operator. Would that be a fair assumption?
Yes, there are a few things that we're working on with DOR, but yes, in principle, that's correct.
So would the operator be selected before the building is built?
Yes, the idea would be that we would go ahead and work to contract with an operator. They would go ahead and take over operations at the current warehouse. And we would build a building to the specifications that they put together for what they believe will be the most efficient way to run the warehouse.
So the ownership of the building, the state's position would be that we're going to be in charge of this, but we're also going to be in charge of the actual building where it's being operated. Why would we not put a deal together where the operator provided the building?
Yes, I think I agree with you 100% that it would be good to have buy-in from an operator. But again, this could be a $50+ million expenditure. That narrows down significantly the number of people who could take on that project. And we could be eliminating people who would be great operators for Mississippi. Also, I think that if we ever got in a situation where they were not doing the job we wanted them to, we're in a bind to take those operations over. And so for us to have control of the physical assets makes it much easier for a transition.
But if we're going to select an operator and then work with that operator to design a building, and then we kick that operator out and we got a building that's been designed just for that operator.
Yeah, and I apologize. I think we're not looking to make something specific for one operator only to operate, but we want to capitalize on their expertise. Right. I anticipate that most operators that are companies that would put in a bid are going to have very similar ideas on how to set up the warehouse. And so we are not looking to have this super specific, only this company can run this warehouse. It won't be quite that specific, but I think that we should use their expertise of the business that they know to build the building and buy the equipment.
And do we know whether Department of Revenue has any candidates in mind for the operation?
I don't believe they have any specific candidates. I know that there are several people who are interested in putting in a bid for that.
And we're charging 25% per case under certain conditions up until 2032. Is that right?
I believe so.
2032. And so a case of liquor that costs $1,500, a case of liquor that costs $30, they're going to get the same excise charge on the case.
Well, right. And it's really more just added to the shipping as we take it out and rolling it into that special fund, strictly per case, because that's what we're paying per case, right? So for the operations, and it's just an easy way to compute it versus a fractional amount per case and cost.
And I know this bill is from and after passage. I noticed that it is from and after passage. Is that right?
Yes.
So there is the expectation that if we pass this bill, that revenue will be able to move very quickly to start the process of selection of an operator, as well as the pre-planning and design for a new building.
Yes, I feel quite confident that DOR, and I don't want to step on their toes, but I feel like they're anxious to get an operator at a new warehouse as well. Just as we get calls and people are frustrated, they know that as well. And they're doing everything they can with what they have to work with. I'm sure they want to speed that process up.
Well, I join my other colleagues who've indicated that we hear a lot of complaints about ABC. If they're 30 or 40%, the inventory is way down. They're having difficulty getting deliveries done. There are some hints that there is favoritism that's being played by certain employees of ABC to certain vendors and liquor stores and whatnot. So I hope that this bill before us will help solve a lot of that.
I do too. Thank you.
Thank you, Mr. Chairman.
Senator Sparks for a question.
Thank you, Mr. Chairman. Thank you, Senator Johnson. And I probably have the least number of package stores in the state of Mississippi in my district. So you may wonder why I'm asking questions about liquor. To me,
I know you're interested.
it's about numbers and it's about service. It's about the fact that the state has taken on a duty and failed miserably. I apologize. We were in another committee meeting. So if I've asked something that's already been answered, I apologize. But it appears a $55 million cost estimate on a new facility with an operator is the goal.
Yes.
Okay. Are we abandoning the existing facility?
We will no longer.
If we build it?
Yes, we would no longer use it for the same purpose. It would be either repurposed or sold.
Has there been any estimation on the valuation of that building now within the city limits of Gluckstadt?
No, but I'm sure it's much more valuable to somebody else than it is to us.
Sure. Construction date estimates?
None as of right now. We don't have any official bids on that yet. And so it's hard to tell.
All right. And I look forward to sitting down and reading the bill and maybe having some follow-up questions with you, but there's a couple of things that have been asked that I just want to bring to the forefront again. The 25-cent case collection on the product, it reads a balance when it reaches a certain balance. But yet we're talking about this is improvement funds, correct? This is the warehouse improvement fund.
That's correct.
Which is separate from the warehouse construction fund.
Well, say that, I'm sorry.
There's two funds listed in this bill on line 253. We talk about a warehouse construction fund.
That's correct. Completely separate. We would fund that through bond or capital expense money. But the ongoing fund is for capital expenses of improvement of building, machinery.
Okay. And so that's what we're talking about on line 480 with warehouse improvement fund.
Yes, that's correct.
All right. Is that subject to a monthly spending limit that you reference on line 138 and 139?
Yes, and we would like for DOR to set that. It's hard to say. You may have to replace a forklift 1 month and nothing for 6 months. And so the goal is to not get in the same situation that we're in now and to keep up the warehouse and the equipment so that it continues to operate efficiently and we fulfill the obligation that we have. So,
and I think that's reasonable. I agree. But in section 8, subsection 3, it says reaches 5 million.
Yes.
Then reaches 10 million.
Yes.
We're not going to reach it if we're spending out of it.
Well, we could, and then it could drop down and we start back up again. Okay. But the reason we do that is, or the reason I put that in, and I'm open to suggestions, open to any suggestion to achieve the goal. But the thought process behind that was that we don't want to just make it a perpetual tax, right? We really want to use it for capital expense funds. In the early years, we should be under warranty with products that's new. We'll need less money and then we'll need more money down the road, inflation and wear and tear. So the idea was to build to a comfort level and then pause and then build to another comfort level. And if we use, it drops down, we continue to build to 25 cents till we get back to that.
Okay. And then last two things, and I'll support your bill out of committee.
Sure.
The one thing I would ask personally, I'd like to visit the site before this bill comes to the floor. Seems to be a problem to get into the warehouse and look at these conditions.
You want to look at the current warehouse?
Yes.
Okay.
Oh.
we need to get with DOR on that.
That's fine. I'm just saying, I think that's a reasonable thing. If you're asking someone to spend $55 million of tax dollars and you are saying it's in terrible condition, I'm not saying I don't take your word for it, but I'd like to see it. Second thing is, final thing, is there any temporary relief, listening to some of the questions here today, to allow people to procure product through legal channels other than ABC? And I'll give you an example. If someone in northwest Mississippi or southwest Mississippi submits an order through the TAP system and it's unfilled, 1 week, 2 weeks, whatever period you want to put on it, that they can go across the state line and purchase product so that that restaurant, that store, now they're hurting their profit margin, but they're going to keep up with the receipts. They're going to report it as cost of goods and taxes submitted to another state. But is that a possibility of a short-term fix for people that are literally struggling to stay afloat?
So in concept, I get that. I don't have issues with that in concept. However, I don't think that this is the right vehicle for that. And the goal is to get a new operator in the current warehouse in the interim time while we build a warehouse. And hopefully we can improve efficiencies in a shorter time frame than just building the new warehouse.
So, okay, and I will make sure I understood what you just said. You're trying to get a new operator in the current warehouse while we prepare a build.
That's correct.
Okay, thank you. Thank you, Mr. Chairman. Thank you, Senator Johnson.
Is there Younger for a question?
Yeah, real quick. From what I was told, trucking was the main issue with ABC. I mean, I know there's an issue with the labor, not being able to pay the labor enough. And I know the warehouse is worn out and it needs to be fixed, but trucking during all this COVID situation, everybody's drinking a lot more. And everybody, all my package stores back home, they like the state handling it. They think it's going to go up if it goes private to privatization. That's all I'll say. Thank you.
Thank you.
To your point, Senator Younger, Mississippi was #1 in the nation in sales of alcohol after COVID, up 27%. So. Senator Horn, you had another question?
Yes, Mr. Chairman, just a quick question. Senator Johnson, ABC is not in the construction business. They're not in the program management, project management business. And why would we not involve our guys at DFA and the Bureau of Building and Grounds?
We are. Technically, DFA is handling it, and we've already submitted the bill to DFA and had some feedback from them. So yes, DFA is actually handling that. We're just instructing DOR to include in the contract that we want a footprint of a building or the layout of a building.
I see. So thank you very much. Thank you, Mr. Chairman.
Thank you. Any other questions? Senator McDaniel, you have a question? Okay. Are there any other questions on the bill? Senator McDaniel, you recognized to speak on the bill.
Thank you, Mr. Chairman. I will begin by saying, Senator Johnson, you did an outstanding job defending the bill. Just a couple of observations, because I do recognize my position as the minority position. It probably will remain the minority position. I don't anticipate anything I say will stop the bill from proceeding on the floor, and yet I feel compelled to say that the problems with the warehouse, the problems with distribution, the problems with inefficiencies are as predictable as the sunrise. This is what happens when governments attempt protectionism or mercantilism. It's happened dozens of times throughout the years with dozens of countries, including our own, and every time it's been tried, it's the same outcome. It never stops. Here's what's strange. We recognize the problems it's caused, and we see the empty shelves. Senator Sojourner and I agree with you. My liquor stores back home want the state out of this business in large part because of the empty shelves. They feel like they can do it better. I will suggest to you the shelves ought to be empty if the marketplace exercised its power. The profit margin is a powerful thing. It's an amazing thing. You let people be creative. You let them work in industry. You let them invest as they see fit. They will create prosperity. and invariably in the state as a way to take away that prosperity, even if it's a small amount. It slows it down. The engine dwindles. Here we are again. And how do we fix it? We throw more money at it. Perpetual problems, predictable results. This will not solve the problem. Why are prices high? Protectionism. Why are inefficiencies exist under the system? Protectionism. Here's the state of Mississippi once again embarking on more protectionism. I realize the bill is going to pass, but I don't know how much longer we can keep going down this path and keep making the same mistakes until we recognize that protectionism has never worked in a free environment, in a free market. That's all I have to say about that. Thank you.
Thank you, Senator Daniel. Any other questions or comments? I do want to say one thing. I think everybody is enjoyed using ABC as a punching bag. And I want to tell you, if you go out there and walk a week in their shoes, I think you would have a different perspective. They're trying their best. And some of it is allocation. Some of it is the strain of COVID that is put on the workforce. And I know it's easy to punch them about it, but I've been out there. I've talked to them. I've looked at the place. They're working with rusty utensils and doing the best they can. So I do want to at least acknowledge that they are doing as much as they can with what they have right now. And the fact that we haven't done anything about it in prior years is why we are in the position we're in. I think this is one option. The other is privatization. Last state that did it was Washington. And if you know anybody in Washington, call them and ask them how it went. They have had problems with theirs and they're looking to go back to control state. It matters how it's done, to your point. And so I do want to thank Senator Johnson for all the work he did on this. This is not an easy issue. There are certainly different ways you can go about it, but you know, this is one option we have before us. And but I do want to thank people at ABC for the effort that they have put forward during this time. They've worked extra hours to try to catch up. They worked extra delivery days. You know, nobody's volunteering to walk in there and throw around 40, 50-pound cases of liquor all day long. And so it's not easy, but nonetheless, they're trying to do the best they can. And I want to thank them for their effort. So if there are no more questions or comments for a motion. Motion is title sufficient do pass. All those in favor signify by saying aye. Aye. All opposed? The ayes have it. Reported out. Last bill on the agenda is Senate Bill number 2846, Mississippi Business Finance Corporation. This extends the repeal date on line 1088. It extends it for another 4 years for the Mississippi Business Finance Corporation. If there are no questions for a speedy motion by Senator Horn, title sufficient do pass. All those in favor signify by saying aye. Opposed? The ayes have it. Motion rise and report. All in favor, aye. Opposed? Rise and report.